This is Matthew Cratter from Bitcoin University. This morning we had a little bit of excitement. Cointelegraph reported that the SEC had just approved BlackRock's application for the spot Bitcoin ETF. This was tweeted all over the place and then was denied by BlackRock on the Fox Business show. So it looks like this hasn't happened. The price action is showing this as well. We spiked up from near 27,000 all the way up to 30,000, took out a lot of shorts in the process, and now we're getting this long wick showing that Bitcoin has been selling back off to levels it was at before this announcement. So that was all the drama this morning. What I wanted to talk about today and what this video was originally going to be about was also BlackRock related. And the question is, what is BlackRock plotting now? I get a lot of comments like this. For example, Obrigado18 wrote in this comment, if a recession likely hits before the halving, this won't go like you say it will. That's when BlackRock buys the real bottom and the ETF conveniently after, then bull market. I think this is a fundamental misconception about how the BlackRock ETF works and will work. Will BlackRock try to crash the price of Bitcoin so that they can quote unquote buy the bottom? There's really zero motivation for them to do this, because when the BlackRock Bitcoin spot ETF comes out, BlackRock will actually be buying Bitcoin with customer money, not its own money. And the purpose of this whole ETF will be to collect a management fee off the assets, Bitcoin, that have been purchased with customer money. BlackRock doesn't really care if its customers buy high or low. What BlackRock really cares about is its management fee. So this question, what is BlackRock actually plotting to do now? First, a disclaimer, I don't have any insider knowledge of any of these things, so what follows is pure speculation, but I think it's pretty informed speculation based on my TradFi background. I think that BlackRock is secretly plotting to, but before I reveal that, I just ask you, if you haven't yet subscribed to this channel, hit the subscribe button, like the video, comment, and share with a friend if you can. I think that BlackRock is secretly plotting to make sure that its Bitcoin ETF is much more successful than Fidelity's Bitcoin spot ETF or ARK Invest's or Grayscale's. I think this is the full extent of the conspiracy. There are all these different Bitcoin spot ETF applications, and BlackRock, as the largest asset manager, I believe in the world, certainly in the US, wants to make sure that its ETF rises to the top, so it moves the needle in terms of earnings. Fidelity is also clearly plotting as well. They're plotting to make sure that their own spot ETF, Bitcoin spot ETF, is more successful than BlackRock's spot ETF. This really is and will continue to be the primary motivation for all of these ETF issuers. Maybe the executives bought Bitcoin itself before they announced that they'd be trying to roll out and have approved by the SEC spot ETF. Obviously, people will trade for their own personal accounts. BlackRock, though, does not have a hedge fund. It does not trade these things. What it's really interested in is management fees, just like that's what Fidelity is interested in as well. As this tweet points out, Fidelity manages about 4.5 trillion and 43 million investors trust Fidelity. So they're going to be very interested in having people buy their ETF as well, and they're going to be plotting to make sure that BlackRock doesn't take all the business. Fidelity actually put out a very nice report, which I'll link to in the description notes below, that talks about how Bitcoin should be considered first and separate from all other digital assets. And I just wanted to highlight the beginning of this PDF. In this paper, we propose that Bitcoin is best understood as a monetary good, as we've been arguing on this channel. And one of the primary investment theses for Bitcoin is as the store value asset in an increasingly digital world, not as a store value asset, but as the store of value asset, the most important category in the world. And then the report goes on to say, Bitcoin is fundamentally different from any other digital asset. No other digital asset is likely to improve upon Bitcoin as a monetary good because Bitcoin is the most, relative to other digital assets, it's the most secure, the most decentralized, the best sound digital money, and any quote-unquote improvement will potentially face trade-offs. It's funny to read this sort of research coming out of Fidelity or BlackRock, because until recently this was considered the realm of laser-eyed maxis and other crazy people who said that Bitcoin is the only digital asset that matters, that it is at the center of the digital investing universe, and that it will become the global reserve asset and the new global reserve currency. It looks like a lot of these shops are coming around to the maxi position. So this is very interesting to see. It doesn't look like we're going to be able to get the Bitcoin ETF today. Bitcoin's probably still staying selling off on the fake news, but it's definitely coming. And as I pointed out in my last video, some of the analysts at Bloomberg, Eric Balchunas, is estimating that there is a 90% chance that it will be approved before January 10th of 2024. If you enjoyed this video, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video, and let me know your questions and comments in the comment section below. Thanks all for watching, and I'll see you in the next video.